What's going on, guys? It is now Wednesday, because it's a short week. Wednesday morning, just left the gym. It has been an interesting week with the puppy. Weekend, that's for sure. She's still not potty trained. She's peeing in the house a lot. She can't hold it very long, which is the problem. And so we're trying to figure that out. And I guess it's just gonna come with time though. But she's doing pretty good. But you know, she gets excited and keeps peeing in the house. But that said, today just at the gym, back to Gold's. Here in South Austin, Sunset Valley area. And the plan is to get back this week to kind of get back on the horse. Sun's freaking coming out. I'm here a little bit later than usual. It's almost 8 a.m. Usually I'm leaving here at like 7:15, 7:30. But the plan is to kind of get back on the horse with the training and the running, which, you know, not that I came off too hard, but last week was a pretty light week, only like 9 miles of volume when, you know, should have been doing like 25, 26, something like that. So hopefully we can keep that going. And trading this week, not expecting too much, but we'll see. We are back in the saddle, and we just finished up the month of May in the trading account. And I have to say, it has been far and away my best month trading, seriously ever, in terms of executions. Not P&L, because I've had bigger P&L months, but it's been a really just a solid month in the day trade accounts. There is a video up on the channel that from a few days back, or about a week or so back, maybe 2 weeks back, that actually kind of covers why. I have a video, I believe it's called Why I'm Having My Best Trading Month Ever, or something along those lines. And I detail a lot of the takeaways, and a lot of that is the same exact stuff, even though we've had a couple extra days since that video of the month, but nothing has changed. We didn't, you know, give it all back the last couple of days. We actually had a solid green day. The biggest green day came the Friday before the month ended, and then we had a red and then a green day to finish out the final 2 days of the month of May. And looking back, you know, the win rate's really solid. The risk rewards, it could get better, but it's solid, it's fine. I'm not like super worried. We talked about it in the live stream. I don't want to talk too much about it here. We can make a separate video or dive deeper into strategy and stuff like that later on, which I definitely will do. But it's been good. So I just encourage people, if you're in that same boat of like trying to figure something out, I encourage you to just adopt one system, one strategy, one style, same umbrella of things, and just stick with that and keep going with that and try to perfect that instead of jumping over here. This bounce play, this breakout strategy, this EMA strategy, all these different things. It's easy to confuse yourself, and it's very easy to find yourself, you know, trying to be good at 17 different things, and in reality you can be okay at a bunch of things, but you're not going to get really good. And in the trading game, you need to be pretty dialed in, or really dialed in my opinion, to be profitable in the first place. So you can't be jumping around to 17 different things. And a lot less trades than last month, and a lot less trades than my prior best month, which I believe was December of 2022. So here we are about like 5-6 months later, and we had our you know, it takes time. And as if you're okay with that progression, like, don't worry. I don't care what the P&L, it doesn't really matter. It's like, now the game is, we stack days, we stack good weeks, can we stack good months? That's gonna be the storyline for the summer. And so that is the plan, to stack some solid months for this summer, not only in the trading accounts, but also when it comes to training, running, and lifting. That is the plan, to be dialed in going into the fall. What is going on, everybody? Welcome on into today, which is Thursday, June 1st. It is day that rent is due. And today we had a couple of things. We had a red day in the markets, actually a very minuscule red day in the markets. Actually was green, went red. It was a trade that I put a stop limit on. It was on Apple. and the stop limit hit, but the stock, like on the option order, but the actual stock didn't break out while I was like literally cleaning up the dog's piss in the other room. And so then it ended up being a red trade at the stop loss, and that was it. So that's what really fucked the day up, which it is what it is. Looking back, those setups, I probably shouldn't have been there in the first place. Other than that though, we had a monstrous, or 6% day, 6.5% day in the Robinhood account today. Like what? It's up like $650. If you were on the live stream a few days back, well, more than a few days back from when this video is coming out, we talked about Carvana. Here's the chart. And so Carvana had essentially this breakout setting up. And we were talking about, the biggest thing I was trying to get across was, well, the problem is that most people are gonna look at this, or a lot of people will look at this and go, oh, I'm gonna buy June 2nd expirations and whatever happens. Well, the stock like broke out, I think on Wednesday, Tuesday. Then it pulled back Wednesday, and then it went nuts Thursday. So there could have been a scenario where you bought on Tuesday, and then you end up getting screwed because the amount of decay and then the stock coming down the next day, and then your option or your strike price is too far out of the money. So I went out and bought 2.5 weeks out and said, hey, this move is probably going to happen the next week or so. Either we're going to hit their stop loss, it's going to be a false breakout, or it's going to go crazy. And it went crazy. The options went up over 100%, and I was like, hey, I'll take that. And I did that in the Robinhood account, and so that's why that account's doing well. I don't swing trade in the Webull accounts. Those are strictly for day trades at this point in time, just to keep it as clean, as simple as possible, and that's it. So that's doing decent. Positions are much, much better. I want to mention really quick as well, what we decided to do was get out. I talked about this in the live stream, one of the live streams this past week as well. All oil shorts, we took profits on those. Nothing like, they still look bad. Like, those charts don't look good. Don't get me wrong. So I'm not like saying, oh, I'm bullish or not. I'm not really, the charts don't look good. But I got out of those shorts. I also got out of my XRT put debit spread, because I'm looking at the put debit spreads, and the problem with them is that you gotta wait really a long time until you get close to the expiration for them to start to really kind of hit your max targets or your max profits, if you're playing them the way that they're like kind of intended to be traded. It's more about like a time decay. You're playing with time decay, and it's a cheaper way, for example, to get in and to get access to shorts or longs or the option chain. And so that's why we do it. And so we got out of those positions, and then the next thing that we jumped into, or the position to jump into to hedge us, is SRS. It is a 2x short the Dow Jones real estate ETF, I believe. The reason why, there's DRV, which is a 3x real estate short. I just don't have the risk appetite for the 3x. The 2x I'm happy to take. And so we're gonna play the 2x real estate short ETF as our portfolio hedge. This way we don't have to worry about options. And yeah, there's decay factors in there as well because it's a leverage ETF, sure, but 2x leverage, I'm not super worried about the decay factor, much at all. Not going to be able to sell a ton of covered calls. I don't think the option chain is very liquid or, juicy, as I like to say. But everything else is just doing its thing. We upped our recurring investment on JEPI to $75 a month from $50 a month. So that's buying about 1.5 shares per month plus the dividend. We're getting a dividend about 1 share a month. So about 2.5 shares a month are getting reinvested back into that core position and just kind of building that snowball. And we talked about the only scenario I would sell that is if the market went absolutely nuts, blow off top type stuff. We go 5,000 plus on the S&P. I'll sell everything. I don't give a shit. I have no interest in, being an investor at that point in time. I've got the rest of my life ahead of me. I can hold the cash, let myself earn an interest rate. I'm noticing we have a stain here on the shirt. That's great. And that's it. So that said, 6 mile run also today. The training is gonna have to start ticking it up. And this Saturday, we got a 14 miler coming up. I haven't done more than 12 in one run, so it's gonna be interesting. I'm gonna go really slow, just take it nice and easy, but we're gonna need to definitely see how the body reacts to that. The legs, one of my legs, there's more, I think that's an overuse kind of issue going on. It just kind of hurts when I walk a lot, but Once I start running, it's kind of fine. It's not a big deal. It kind of goes, to the back of the head. Who really cares? But other than that, that's the update for this point in the week.
Good Friday morning. My leg, for whatever reason, I think it's just kind of like a stress thing on my leg, but I had a pair of Yeezys that I honestly haven't worn in a while. But I was looking around, I bought some new shoes, some better cushioning, better recovery shoes for like post runs and stuff. And before they get here, I'm like, oh man, my leg's freaking killing me. Like every step, my right leg just like has like, I don't want to say a shooting pain, but there's like a decent pain that just kind of shoots up from like the shin up towards the knee, or from the knee down, whatever you want to say. And the Yeezys, man, I don't know, like they got them, I guess I haven't worn in the cushion too much, but they feel pretty good. I don't know, I paid too much money for the shoes back when I bought them, but I mean, I guess they're worth something, right? Hopefully today markets provide a decent move. We'll see. Last Friday was the best day that I've ever had in the past, or best day that I've had in a while, or provided the best opportunities in a while. So we'll see. But workout's done, pull day today, and feeling pretty good. Other than the leg, which is not that bad, feeling pretty good.
Starting off the month of June with 2 red days. Here's the thing that I'm kind of now thinking about. So coming off the best month of my trading career ever, obviously June's a long month, right? 2 days doesn't mean anything. But one of the things that I think plays or is playing a role is, I don't want to say that like I'm worried that I'm gonna fail, or like, okay, I'm thinking about when I'm gonna mess up, because eventually like the streak, not that it really was a streak, but eventually like it's gonna slow down, or you're gonna have a red trade. And so the biggest like mental barrier that is like not talked about that much, I think really comes down to is like, and a lot of people probably experience this and never can get over that hurdle. I think that I've never been able to get over that hurdle myself either. But we're gonna try to get over that at some point, right? And hopefully that we're in the process of doing that. So you have a good period, and then you're like, okay, like we've been doing well, it's time to size up. You have, let's say it's a couple weeks, couple months, whatever the time frame is, 30 trades, 100, I don't know, how many trades you take or whatever. But then you're like, okay, let's size up. We're doing well. If we keep operating this way, why not size up a bit more? And maybe we were using $1,000 position size. Now we can go to like $1,500, or let's say $2,000. But then there's something that happens, and that number or that level, maybe it's not a number, but there's something that happens when you start to do that. And now like you start seeing a bigger, drawdown on the red trades, or you have 2 red trades in a row and you're like, oh shit, now I had made X, let's say you made $1,000, right? Over whatever the period is. And now you start sizing up. Now you take 2 red trades, and now you've given back, I don't want to say half, maybe you've given back, a decent chunk of what you just made last week, last month, whatever the time frame. And so it really is, it's messing with your head a lot, and it's a lot more mental at that point. And so I think that's like the next biggest hurdle, is because I can size it down and get to like a sizing where like it's not that meaningful in terms of 1 or 2 trades. Like who really cares? It's not a ton of money, or at least I don't feel like that. And then you start saying, okay, let's size up, and then you start sizing up, and then something happens and you start doing shit. Not that like this week or so far this month, it's been 2 days. The biggest problem, or there's 2 trades that I had that I entered, or I had like trigger happy, and I put a stop limit order on, walked away, did something else. It triggered, but the actual chart never broke. And so the options, like in the options market, or the options contract, it traded up to the price that would trigger me. And that price I set based off of looking at the chart, saying, okay, well, we were here at this price on the chart. The option was trading for this price. So that means we break this level on the chart, we should break this level on the option, or roughly, break this level on the option. Now that there's decay and stuff too. And so I set my stop limit. It has triggered now twice before the actual chart broke. And then in both those scenarios, what happened was the chart never broke. And so it bounced off that support, or it rejected that resistance and then went the other way. And so I hit my max loss, and then boom. So that's just literally like me not executing properly because I've been busy with the dog or with this or with that, and I just haven't been like super focused in. I think that's part of it. And so I think the easiest answer or solution to something like that is, okay, well, we don't do the stop limits. I like them, but we hit the button when we hit the brake on the chart. We don't try to set things up beforehand and walk away. If I'm gonna walk away, right, I need to make sure that it's a trailing stop loss or it's a stop loss, and that's my max risk. I'm not gonna be entering a breakout or a breakdown while I'm not watching things actively. So I don't know, I'm curious what people will think about that, but that's kind of like where my head is at of the next like hurdle. Like that's like the next level, because you can size it down and whatever, but the next hurdle is gonna be, okay, from where we're at now, how can we start to size up and not have to deal with those mental barriers, right? And get over those mental barriers. That said, here's a look at the Robinhood portfolio. It was up nice, at least when I'm filming this. It's up pretty nicely this week. Let me check the week stats. I believe it's up like it's 8.5%, 8.25 when I'm filming on the week, which is really good. I did take a couple $100 out of my Webull account. So after last month, took some of the profits out and we're resetting back at a number that I'm comfortable with. And so that's why the overall chart here doesn't look like it's actually up a lot. The overall like Robinhood portfolio, the 10K portfolio or whatever the number is, now it's 10.5. That is like the 100K. We're trying to get that portfolio to 100K. Everything else is feeders ideally as income, right? The Webull, not everything. The Webull and the futures account, ideally, if you take profits out of there, are feeders into that over time, or to pay debts faster so that we can get to a point where we're putting more money into the Robinhood account and bringing that snowball up over time. But it's doing well by itself. So I'm managing it for now, right? Knock on wood, decently so far this year. This year's stats year to date, it's up about 40%. So for now, we're doing pretty good. And obviously that's not sustainable, but based off movements in stocks and the volatility in the markets, I've been able to do okay, but we're trying to bring ourselves back from being this like crazy volatile up and down to much more sustainable and slower growing portfolio through dividends, selling covered calls, etc. And that's kind of like, as you kind of see this kind of grow and play out over time, that's where like the focus and the majority of the funds from here will go. And then we'll still use some, whether that's some margin or whether that's excess funds in the account to play off of, hedges and to play off of different sectors, for example, bonds or maybe silver exposure, things like that I have right now. But the majority of the plan is to be putting ourselves into stuff I want to hold longer term, selling covered calls to cash flow, and then having a little bit or smaller exposures elsewhere based off of the overall macro environment. So that's the plan. If you guys got something out of today's video, thumbs up button, consider subscribing to the channel, and let me know your thoughts if you're in the same boat about sizing up, because that's like the next thing for June. Now, maybe it's not going to happen in June and maybe it's not the best time to do it, but at some point, right, you can come back down. I have these times where I kind of reset and we're feeling good and we've got a good period, and then it comes down to sizing up and there's just something that like unclicks and it throws me off. And I think this past week has just been kind of mistakes in executing the strategy and the system that I've been playing with. It hasn't been like, oh, these are just not working. Some of them haven't worked, but also I have been entering a little bit early, not playing 100% to the system. So we'll see, but that's the plan going forward. Thanks so much for watching, and we'll see you guys in the next one. Peace.